As a trader, I failed at trading until I understood how to fully develop a top-down analysis. A top-down analysis was the final piece that was missing in my trading before it all started to click. And in today's video, I'm going to share with you step by step the 3 different time frames that I personally use to develop a full top-down analysis. And then I'm going to show you real examples that I took in real time to help you develop a solid understanding of how to develop a top-down analysis to help improve your trading. So without further ado, let's get right into the video. So what is top-down analysis? So top-down analysis is very important no matter the strategy that you trade. And top-down analysis gives you confidence by using the higher time frames. So whatever strategy that you trade, if you can incorporate the higher time frames into your trading, it will give you a lot more confidence in the trades that you actually take. It also gives you sniper entries with tight risk and massive reward. When you trade in line with the higher time frames, you can capture those nice precise entries on the lower time frames to target those higher time frame key levels. Also, what it does is give you a clear picture of the overall markets. So if we're always just stuck on the lower time frames, you're on the 1, the 5 minute, you don't understand what's going on the overall markets, it's going to be very hard for you to have a really clear picture of what's going on. So if you use the top-down approach, it'll give you a more clear picture of the overall market, so it'll make it a lot easier when you do take any sort of trades. And finally, what it gives you is conviction in your trade ideas. So a lot of times when you're on the 1 minute time frame, you're not going to have too much conviction if you're so fixated on those smaller time frames. So if you zoom out, have a higher time frame thesis, trade within the trend, it's going to give you a lot more conviction in all your trades that you do take. So with this being said, I'm going to break down exactly everything that you need to know about the top-down analysis. I'm going to go through different time frames that you can use, the ways you can use those time frames depending on what type of trader you are. And then of course, I'm going to be going over some examples at the end to really help you guys solidify exactly how to use the top-down approach in your everyday trading. Let's get into it. The first thing that we're going to talk about is time frame analysis. So the first thing that we're going to be looking for when using the top-down approach is we're going to start off on the higher time frame. So this is the first one that we're going to be looking for, which is essentially determining a bias. And determining what bias means is essentially just understanding where is price most likely going to gravitate towards. Or is it going to gravitate higher, or is it going to gravitate lower? And the most common time frames that are used to determine the bias is number 1, the weekly, the daily, and the 4-hour. Number 2, what we have is your medium time frame. So this is what's called your narrative / setup. Then the best time frames to determine a narrative and a setup is these 3 time frames, which is your 1 hour, your 30 minute, and 15 minute. And when you're developing a narrative, is if we're gonna go higher, where are we gonna go higher from? If we're gonna go lower, where are we gonna go lower from? And the same thing with the setup is just asking yourself, where are we gonna be looking to take opportunities in the markets? We can't just trade in random areas of price. We have to always be trading around key areas and levels. And number 3, what we have here is the lower time frame. So the lower time frame is what's called our entry time frame, and this is when we go on to those smaller time frames to get those precise entries. And this can be done on the 5 minute, the 3 minute, and the 1 minute. I personally love using the 5 and the 1 minute. And of course, what we're going to be doing now is going on to the lower time frames to get those really low risk entries that we can use to target those higher time frame key levels. So with this being said, let's start off with determining bias. So right here, you can see that we're determining the bias on the higher time frames, the time frames that we're going to be using, the weekly, the daily, the 4-hour. And really when I determine the higher time frame bias is usually done on the weekly outlooks and on the weekends. So every single weekend on Saturday, I do a weekly outlook and a weekly scan of what I'm looking for coming into the week. And based off that, I'm going to be looking for potential setups that are going to confirm my bias for the week. So some things that I do look for when determining the weekly outlook and my weekly bias is I'm going to be looking for market sentiment. Market sentiment is very important, especially if you're day trading. You have to understand what type of market environment that you're in. Currently, we're in a pop and fade market. There's a lot of uncertainties. You can't really swing trade. It's very bad for long terms, but what it's great for currently is a lot of short-term speculation because there's a lot of volatility and liquidity in the markets. So based off that, we're looking for quick trades in the market since there's a lot of uncertainty and we're not looking to hold on our positions for a very long time. Second, I'm looking for trends in the markets. What sort of trends are we in? Are we consolidating on the higher time frames? Are we in a bullish trend? Are we in a bearish trend? These are good things to understand, especially coming into the week, so you have a bigger picture of what the overall market wants to do. Next, what we have is news. If you have any sort of news event coming into this week, that could be core PPI, CPI, right? FOMC. This is very important because news can affect the market very greatly, especially in this market where there's a lot of headlines that drive the market. We have to be very careful of what news is coming into the markets and what news can potentially affect the market and how the market's going to react based off that news. And finally, what we want to be looking for is a strong/weak bias. If we have a strong bias, that usually means we're in high probability conditions. We can look to put on more size and look to be more aggressive. Whereas if we have a weak bias, markets aren't as clear. We want to be hands off and we want to really be patient and we want to step off the gas. So as you can see right here, what I have is a strong bias. So essentially what a strong bias means is that every single time frame that you personally use is aligned with one another. So let's say, for example, we're on the higher time frames, the time frames that we do use, the weekly, the daily, the 4-hour. What we're going to be looking for is every single time frame to be aligned. So time frames that I have in this case, I have the monthly, I have the weekly, I have the daily, I have the 4-hour. And if every single time frame is in line with one another, that means every single time frame is bullish. This creates what's called a high probability environment. And high probability environment means that every single time frame is aligned. So that means we have a very strong bias and everything is very clear. So all we're looking for is dips for continuations towards the upside, compared to a weak bias where most time frames are not aligned or it's not as clear. So in this case, we have the monthly once again. The monthly is bullish. We have our weekly chart, which is bearish. We have our daily chart, which is bullish. And then we have our 4-hour chart, which is bearish. So you can see right here, most time frames aren't as clear. If the monthly is bullish, the weekly is bearish, and the daily is bullish, and the 4-hour is bearish, this just makes it so it's very difficult. And what it creates is what's called a low probability environment. So if it's a low probability environment, what happens? We want to step off the gas. We want to be a little bit more conservative. And really, it's going to be trickier and it's going to be a lot more difficult to trade, especially if you don't have a clear bias on the overall markets. So right here, you can see I have the NASDAQ daily chart pulled up. And what I want to mark out and what I really want to look for is the past 20 to 40 days on the daily time frame. This is a good rule of thumb when you're looking at the daily chart. Anything past 40 days doesn't matter as much, and the most clear trend that you're going to get is in the past 20 to 40 sessions. So as you can see right here for the NASDAQ, what we're going to be looking at is really this bulk of price action. We're going to look at this bulk of price action, and then we're going to also look at the leg that we're currently in. So as you can see right here, what we're in on the NASDAQ coming into the year was a lot more consolidation. You can see we're really ranging from this swing high all the way down towards this swing low. So you can see that the market is clearly in a range coming into 2025. But basically what happened was we ended up breaking outside of this range. So you can see we actually broke outside of this range recently, earlier in March. And now what's happening is we're actually starting to go into a downtrend. So you can see, right, price went from the top of the range. Now we're at the bottom of the range and we're actually breaking underneath this range and continuing lower towards the downside. So you can see on the daily chart in the past couple of weeks, what we've been doing is we've been in a downtrend. So a lot of names that you've been looking at have been just staying heavy and every single pop has been shorter towards the downside. So now what we can do is head on to the 4-hour time frame. So we just went from the daily chart down to the 4-hour time frame. So this is the next time frame below. You can see in this case, right, the NQ on the 4-hour time frame is clearly in a downtrend. If we're looking at the past 20 sessions here, right, price is clearly underneath this key low, which is your 21,000. You can see price clearly had that nice break underneath, retest, and now we're just continuing towards the downside. So you can see for the overall markets, for the NQ, we're just continuing towards the downside. Every single pop has been faded lower. So clearly so far we have a clear bias towards the lows, right? The daily chart's bearish, the 4-hour chart's bearish, right? Most lower time frames are bearish as well. So all what you would be looking for is pop and fades lower because the higher time frame is bearish. So the second step what we have now is the medium time frame, and the medium time frame is really our narrative slash setup time frame, and that can be found on the 1 hour, the 30-minute, and the 15-minute. So where I'll be identifying these setups is within the pre-market and intraday price action. By the way, if you guys do want to join my pre-market preps, I do them every single day right here on YouTube at 8 a.m. Eastern Standard Time. I go over exactly what I'm looking for every single day coming into market open. So as we go back onto it, what am I looking for in the pre-market? So every single day you'll see I look for potential news. Next, what we're going to be looking for is trends. And in this case, the trends that we're going to be looking for our narrative and setup is just the past 3 to 5 sessions. So instead of looking at the past 20 to 40 sessions, all I'm looking for is the past week's price action when I'm looking to build a narrative and I'm looking for a setup to take a trade off. Next, I'm identifying key levels, right? Really just old highs, old lows, or previous day highs, previous day lows. These levels are the levels that I use every single day. They're just the exact same levels over and over again. If you want to see how I mark out key levels, you can watch the pre-market prep or you can watch my other videos that I show you guys exactly how to mark those out. Order flow is very important when it comes to looking for potential setups and understanding what you're going to be looking for, at least when it comes to top watches on the day. Order flow is just understanding if markets are staying heavy or if we're going to be looking to potential reverse back towards the upside. And relative strength slash weakness is very important, especially if I'm trying to identify my top watches, is comparing the overall tech names to the overall indices that I'm trading. So if Tesla is more relatively strong than the Qs, I'm going to be looking for continuations long on Tesla, or if it's relatively weak, I'm going to be looking to short Tesla towards the downside. You can also use relative strength slash weakness with the overall indices themselves with SPY compared to the Qs. There's a lot of different ways that you can use relative strength slash weakness. That's a whole nother topic for another day, but let's go on to the next slide. So the next slide right here, what I have is news. And what's really broken down into is red folder news and headlines based news as well. So majority of the times what you want to pay attention to is just red folder news. In this market, you actually have to be very cautious of headline based news as well, because Trump or anyone else can tweet out something and will have the markets moving crazy volatile one way or the other. So first thing you want to pay attention to is red folder news. You can find this on Forex Factory. What you want to be looking for is number one, core CPI. Core CPI, right? Core PPI. A lot of these ones are very important when it comes to the overall markets. So the major ones you want to keep an eye out on is core CPI, core PPI, FOMC, whenever Jerome Powell is speaking, right? Whenever Trump is speaking, and then we also have unemployment and we also have consumer sentiment. Those are the main 5 ones that you want to pay attention to. The rest of the news events, if it's red folder or if it's orange folder, shouldn't really affect the market as much, right? But the main ones are the ones that I just ended up laying out. And then we have headlines-based news. You'll see in this market a lot of headlines-based news that can happen either over the weekend or intraday. So that's why you can't swing any positions in this market. It's because it's just so volatile that anything can happen overnight that will really reverse your position. It's very hard to manage risk. Next, what we have is trends slash key levels. So every single day I come into the market open, marking out the exact same levels over and over again. So you can see right here, all I'm marking out on the Qs. Of course, I have these levels already pre-drawn, but I've already marked these out in the pre-market, and these are exact levels. I haven't changed them whatsoever. They're just all old lows and old highs. So you can see right here for the Qs, every single old low is now being used as potential resistance once it gets underneath for this continuation towards the downside. So you see these levels are respected very nicely when it comes to the markets. When we create new lows once again, right, price ends up having this nice continuation lower, right, we create a new low here as well, and so on and so forth. So you can see every single key level that I have marked out is usually just an old high and old low. So these are the things that I look for when drawing out key levels in the pre-market and trying to form my thesis coming into market open. So you can see right here, we're on another example that's just on Amazon, right? Our previous day lows, right, turned into support. And then once it got underneath, use this as resistance. We can mark out this low, drag this over. You can see how well price is really reacting around these key levels, right? Amazon is doing a nice job around these previous old highs and lows. And this is not just Amazon. This happens on every single ticker. It can be the major indices. It can be the tech names. No matter what ticker you trade, if you mark out these highs and lows, you'll see how price reacts around these key levels. And these are the only levels that you need to mark out on a chart. Now let's go on to the next slide. The next thing that we can do on the medium time frame is identify order flow and relative strength slash weakness. And this is something I'll do in the pre-market and intraday as well. So order flow is very important. We can identify relative strength and weakness based off of the pre-market action, based off what it's doing on the higher time frame. And really that can translate into into intraday price action. So the easiest form of order flow relative strength slash weakness is just comparing the overall indice in this case, which is the QQQ, to the name that you're trading. So let's say you're trading Tesla, for example. You can see clearly Tesla is pushing towards the downside on this day compared to the Qs where it's consolidating a lot more. So you can clearly see that Tesla is really relatively weak compared to the overall markets on this day. So most likely what you're going to find on the next day is more continuation lower just based off the relative weakness that it does have. So if the Qs ends up dropping, Tesla is going to end up dropping a lot more just based off of this chart that I can see right here currently. Now let's go into the lower time frames to see exactly what I look for. So as you can see right here, I'm on the final part, which is the lower time frames, and this is what's called their entry time frame. And this is very important. The time frames that we use is your 1, your 3, and 5 minute. I personally love just using the 1 and 5 minute. And this is really where our intraday price action comes into play. So we had our higher time frames, which we can do on the weekends. We had our narrative slash setup time frame, which we can do in the pre-market. And now finally, this is where we actually look to take opportunities in the markets, which is intraday trading. So we basically lay out the foundation. Now this is where we actually execute in real time. So what are we looking for coming to market open? And we're looking for all different types of setups, depending on if we have an opening play or if we're looking for a day trade, or depending on the actual context of the overall market as well. There's going to be different setups that we're going to be looking for on a daily basis. Other things that we're looking for is really setups with the most confluence. If we have more confluences, the better. We have less confluences, it's not going to be as good of a setup. We're also looking for our entries slash exits. So when we're on the entry time frame, which is on the lower time frames, we're looking to manage our positions on these lower time frames to give us those nice precise entries and exits. And then finally, what we have is risk management, and we can do this on the lower time frames. Whatever time frame that you enter in on can be used as risk, or the time frame above if you do want to give it a little bit more room. Now let's go on to the different types of setups that we look for. So as you can see right here, the different types of setups that we look for on a daily basis. So it's really split up into two things, which is opening plays and day trades. So really your opening plays is less than 30 minutes of market open. So anything underneath 30 minutes, I would classify as an opening play. So there's a bunch of opening plays that I do have listed out that we look to take on a daily basis if the market presents itself. So what we can be looking for is an opening drive, right? We have gap and goes, gap fills, dip and rips, pop and fades. So there's a bunch of different types of opening plays that we do look for. This happens right off the bat. And then what we also have is our day trades. What we have is your previous day high and low retest. We have an order block retest. We have an opening range retest. We have a key level retest. So these are the main 4 retests that I personally use. There's about 10 to 15 different types of retests, but these are the main ones that I use on a daily basis. And if I'm looking at an opening play, these are the ones that I use not on a daily basis because they don't always set up, but at least for the day trades, these are the ones that I use every single day. So as you can see right here, we have a bunch of different day trading setups. We have a bunch of different opening play setups, and really to determine which setups that we're looking for is based off of the medium and the higher time frames. So with this being said, let's go on to the charts and let's put this all together and see exactly what this would look like in real time. So right here, you can see on my first example, this is on Tesla. This was February the 26th, and I ended up taking puts towards the downside. I ended up making $16,000 on this position, around 40 contracts traded, $26,000 position size, net ROI of 60%. Could have done a little bit of a better job in this case. But the main thing I want to talk about is the risk amount, not how much I made. And I only risked around $2,700 on this position, around $6 on the contracts, would end up being around 5.94 risk to reward ratio, which ended up being super solid. The setups I ended up taking, it was your previous day low retest, it was your 1 minute opening range break retest, it was also an opening drive play towards the downside. Now let's go on to the charts to see exactly the top down approach that I used to be able to capture this move towards the lows. So right here, you can see we're on Tesla, we're on the daily time frame, and all we're going to be looking for determining our buys, as I mentioned, is the past 20 to 40 days. If we're determining buys, 20 to 40 days is all that you need. And in this case, all I can mark out is really this past 2 months worth of price action, give or take. You can see right here, this to me is in a clear downtrend on Tesla, right? We end up having this nice push towards the upside. This was after elections, but currently we're in a downtrend here on Tesla. We ended up up breaking underneath this key low, which was our 360. Now you can see prices using this area as a retest towards the downside. So you can see we're clearly in a downtrend here on Tesla now, or we're essentially using this as a retest. And what we're going to be looking for coming to this day is really the reaction that we have off of your 330. So we can go back here on Tesla. We can mark out a couple key levels. In this case, what I can have marked out is this daily gap, which was this 325. And now what we can be looking for is the reaction that we have on the medium time frames. So now we're on the 1 hour chart and you can clearly see that we're in a downtrend on Tesla, right? On the 1 hour time frame, we're clearly making lower highs. We're continuing to push towards the downside. We're staying heavy underneath this general area, which is our 364 key level on the higher time frames. All pops are being shorted lower, right? Every single high is being shorted into on Tesla, right? So coming into market open, the key levels that we're going to have marked out really is this 325. So for Tesla, based off of our narrative, what we're going to be looking for is the reaction that we have off of this 325. So if we can break underneath this 325, we'll be looking for this immediate retest for continuation lower, right? If we can hold this 325, we could be looking for this pushback towards the upside, but just based off the higher time frames, this V-shaped recovery is not something that I look for. I always like trading within the trend. In this case, the trend is towards the downside. So now we can go into the lower time frames to look for a potential entry. So right here, you can see we're on the Tesla lower time frames. I actually have the 15-minute pulled up to the left-hand side. We have the 1 minute pulled up onto the right-hand side, just to give us a little bit more context of exactly what we're looking for. So coming into market open, what we like to see is the reaction that we have off of our 325. We can get underneath this. We'll be looking for this immediate retest underneath your previous day lows for this continued push towards the downside, just based off of the higher time frames and the medium time frame as well. So now let's play out the tape coming into market open. So right here on Tesla, right off the bat, we're pushing underneath your previous day lows. So you can see on the 15-minute time frame, we're trying to break underneath this low. On the 1 minute time frame, we already broken underneath this low. So what we like to see for Tesla for continuation lower, we like to see is a hold underneath your previous day lows, which is your 325.08. You can see in this case, this would be your previous day lows as well. So hold of your 325.08 will push this back towards the lows. So what we'll be looking for is the immediate retest of Tesla off this general area. You can see that price is now pushing back up in towards this 325. And you can see right there, we have that rejection candle. We came right back in towards that 325, which is our previous day lows. We had our 1 minute opening range here as well. This is the exact level I go short from. Now with a stop, just a break above. And in this case, where am I looking to target? I'm looking to target levels all the way back towards the downside. So if I go onto this 15-minute time frame here, the targets that I'm going to be looking to target on are a lot more higher than the 15-minute time frame. So I have to zoom out all the way back here. I actually have to go onto the daily chart here on Tesla, and you can see right here the key levels underneath this 323 is all the way back down towards this 310. So this is the key level that I have marked out on Tesla. I have a couple other levels marked out is all the way back down towards this daily low, which is this 297. So now we can go back onto the lower time frames and play out the tape. And you can see on the 1 minute time frame, we end up having that super sweet rejection off of your previous day lows. Even on the 15-minute time frame, not a single up close candle. If you go into the 5-minute chart, not a single up close candle as well, all the way down towards that 308. Of course, I didn't hold my full position down towards 308. I was scaling out along the ways. That's what I always preach. So this is a great example of using everything I just combined with the higher time frame thesis down to the medium time frame, all the way down to the exact entry model. So this ended up being a super solid trade on Tesla. Let's go on to the next example that I have for us today. So this is the next example that I have. It's also on Tesla as well. This was a little bit earlier into the year, but this example is still a very good example that we can go over. I ended up making $9,000 on this one, 20 contracts traded, $22,000 position size, net ROI 41%. I was risking around 10 on the contracts, ended up being around $2,000 risk, which is a 4.32 risk to reward ratio. Setups I used in this case was the 84% rule and the 5-minute break and retest. Now let's go onto the charts to see exactly what I was looking for. So right here, you can see we're on the Tesla daily time frame, and this was actually before the previous trade that I just showed you guys. But in this case, if we're looking at the past 20 to 40 sessions here on Tesla. This is a lot more bullish than what it looked like later after the development. So you can see in the past 40 sessions on Tesla, this is a lot more bullish, right? We're in a clear uptrend on this name. So what are we looking for on Tesla, right? Is we're looking for continuations towards the upside. So the bias is bullish at this time. This is also coming to 2025 where Trump's coming to office. So we're having that nice run up towards the upside. So during this period, right, everything was very bullish on the overall market. The sentiment was bullish as well. All we were looking for was just looking for dips to go long on the overall markets. Now let's go into the medium time frame. So you can see I'm on the 15-minute time frame and I'm on the medium time frame, and all I'm going to be doing is looking for the past 3 to 5 sessions in this case, which is the past week's price action. And if I'm looking at the past week's price action, and I consider in this case Tesla leaning more towards the upside just based off of this previous price action, we're continuing to make lower highs, lower lows, right, lower highs, and we're continuing to push towards the upside. So based off of the median time frame, the key levels I'm going to have marked out on Tesla is just going to be your old highs and old lows. So the key levels I can have marked out is all the way back up towards 429. I can mark out your previous day highs as well, which basically coincides with this high back at 422. So we can just mark this out as a general area. So coming into market open here on Tesla, the area of interest that we're going to be looking for is the reaction around your 423. If you can get above your 423, hold above your 423, we can see this continue push back up towards your 429. If we reject off your 423, we're just going to see this continue push back towards the downside. So now we can go into lower time frames to see the reaction that we have off of your 423. So we can play the tape here coming into market open. So you can see so far within the first 5 to 10 minutes of market open, 5-minute candles closing above this 423. 1 minute is having this nice push towards the upside. So all we're going to be looking for now is really the retest off of your 423, right? Your order block down close candles, your 1 minute opening range for this continued push back towards the upside on the overall markets. So you can see right here for Tesla, it is showing some nice buyers that are stepping in off this 423. Now what we wait for is this confirmation that price wants to head back towards the upside, and we can be looking for long positions back towards high of day and above on this name. So right here on Tesla, the key level that I have marked out in combination with your 423 was really this 5-minute opening range. I like to see it close above. So you can see in this case, right, 5-minute candle is holding this 423 fairly nicely. We have some nice bullish candle here as well. We're so far getting that 5-minute candle closure. This is actually where I go long, which is on this exact 10 o'clock candle. The reason why I went long in this case is because it broke back above your 5-minute opening range, which is a super key level. Also your breaker structure as well. In this case, this was my stop, which was a break underneath this low, which was your 423. And now I was looking for this continued push back towards the upside on the overall market. Now we can play this out. And right there, you can see that Tesla ended up having a super solid push towards the upside. And yes, I did take this in real time. I've talked about this example a couple times already, but I thought this was a great example to go over exactly my in-depth thought process based off of the higher time frame and the top-down analysis that I talked about today. So with that being said, I hope you guys did enjoy that video on the top-down analysis, and you can see the power of the top-down analysis and how I use this every day to incorporate it into my trading. So if you guys did enjoy that video, I appreciate if you guys drop me a like and sub, and I'll see you guys next week for a brand new video. Peace.